Welcome to this week's Stockscores market analysis. Lots of crazy things going on in the market in the past couple of weeks and a lot of questions about whether there is more weakness to come. Well, this week I'll answer some of those questions. We'll go through the equity markets, we'll go through some of the commodity markets, the currency markets. There are two really important moves this week that I will highlight, and then of course we'll answer that question, are we likely to see more weakness ahead as the market works through the banking crisis. So the first chart that I have on screen here is an intraday short-term chart of the S&P 500 ETF, symbol SPY. You can see here that the trend is down, so we would have to say that that is a bearish chart. In the short term, there are some rising bottoms building, and that's a short-term positive. If we can break the downward trend line, if I draw that downward trend line across those tops, and we break that downward trend line from a rising bottom, then we should see an end to that weakness. Until that happens in the short term, I would be cautious because the trend is down. So although we have a little bit of hope here in the last few days, the trend is still down, so be patient and wait for that to work its way out. Now, what is encouraging is the longer term chart. When I jump to a 1 year daily chart, you can see that really the trend over the last 8 or 9 months has been sideways. And in the last 6 months, we're building rising bottoms. And so there's been some weakness here in February and March. We haven't broken that cycle of rising bottoms yet. We're close, but so far we are holding it, and so that is encouraging. And then if you look at the long-term 3-year weekly chart, you can see the big sell-off on interest rate concerns in 2022, and in the last 6 months, you're building some optimism. This is setting up for what I call a bottom fishing pattern, where you break the downward trend line, that's step 1. You build a sideways rising bottom, that's step 2. What we need now is step 3, which is a break up from a rising bottom after a break of the trend line. So in the long-term sense, the market is working on a bottoming pattern. In the short-term sense, we've had lots of volatility to the downside, and for good reason with banking issues, but I don't think the market is as bad as it feels in the short term. Now let's take a look at the Canadian market. It's going to be very similar. We'll take a look at T.XIU. Here is the daily chart going back 8 months. And generally we have a sideways trend, but with a fair bit of volatility. That means investors are uncertain. So when you have expanding volatility like you have here, I can draw a line across the tops, line across the bottoms, because those things are moving away from one another. What that means is volatility is expanding, and that means uncertainty is growing. And it feels that way. The market not really sure about what's coming next. You've got a lot of issues in the financial sector, of course, and that is weighing on markets in general. The Canadian market has fallen over the last 4 or 5 weeks, but it is at some support, and you can see that we bounced off of that support on Thursday. So the market is oversold, negative, but also at support. So it's likely that the Canadian market will bounce back next week because it has fallen into support. That does not mean it is guaranteed to happen. We just trade probability, but it's most likely that you'll see the market bounce. Now, the Canadian market is heavily influenced by commodities, and this is where the first of our important charts comes up, because you can see here the oil market, which has a heavy influence in the Canadian market, is in a bearish pattern. This is called a descending triangle, and it's broken down through support from a descending triangle. And that sets up likely for more weakness in the oil sector. Now, if I go to the 3-year weekly chart, and this is why I said this is one of those important charts this week, is you really see the important breakdown in the oil market. I would be very cautious, downright pessimistic about oil right now, given this breakdown, because you've broken down from falling tops, you've broken the upward trend line in a decisive way, and you are moving lower. So be bearish on oil because of that breakdown. Now, if we go to the gold chart, which is another market that's very important to the Canadian market because there's a lot of mining stocks in the Canadian market, you can see the exact opposite. The gold chart has gone up quite significantly this past week as there's a rush to safety, and you can see volume increasing there. So that is fairly bullish. The concern I have comes in when we get into the longer term time frame, because gold, while it's rallying and really has done well for the last 6 months, is now coming into resistance at these old highs. And so although it feels like the gold market is pretty strong, keep in mind that it's a reaction to some relatively short-term event. You know, we had this sudden concern about some of the banks in the US. Well, banks everywhere really, Credit Suisse as well. And that has caused that flight to safety. As that concern wears off, and this is typically what happens when you have these news-driven events, they wear off, and then the hedge against that concern starts to wane. And so you see here, although it looks strong, and I would say you can be a day trader, even a swing trader of gold stocks, just realize that usually when things rally into resistance, they get stuck at resistance. And I think that the gold market may top out soon. I'm still a short-term bull on gold because there is an upward trend, and you can see that if you jump to a 1-month chart. You can see the nice strength there, but it's due for a bit of a pullback given the gains over the last 2 weeks. All right, well, let's jump into currencies now because that's a source of another interesting chart, but it's not the US dollar chart. The US dollar chart has broken the short-term weakness in the last 6 weeks, and it's kind of bouncing around in here, still fighting with this downward trend line. You can see it's right at that, and so you need to be careful with that. If we go to the 3-year weekly chart, we get that longer-term time frame where we have an upward trend. The market ran away from the upward trend, and what usually happens is they pull back to the trend line and they bounce off of it. And that is what's happening so far. What you want to watch for with the US dollar is, does it ultimately break down from a falling top? Because if that happens, then we'll have a bearish move on the US dollar. Has not happened yet. It could just as easily meander here along the upward trend line. I just try to give you things to watch for, because to tell you about things that have already happened doesn't have a lot of value. You have to have something to watch for so you know what the next leg of the likely move is. All right, here comes the other important chart, and it's been a long time since I've said this, but I am bullish now on Bitcoin because it has managed, and the 3-year weekly chart is the better one, it has managed to finally break up from a rising bottom. You can see the move there. Now, volume isn't real strong in support, and of course, this is not Bitcoin itself. This is an ETF that's based on Bitcoin, and it's not an exact representation of Bitcoin, but it's a pretty good proxy. So the downward trend line has been broken, and now we're breaking up from a rising bottom. This is pretty good. I'd give this a 6.5 out of 10 as a signal that the crypto market is likely to move higher. The catalyst here, concern about banking, and I suppose that makes people want to move to assets that aren't controlled by systems and governments and that sort of thing, and perhaps that is what's driving cryptocurrency. But I do think that that's an interesting chart. I've been a bear on crypto for a long time, so this is a real change of direction, and I think an important one. So let's take a look at my ratings then. US stocks neutral on the long term, but bearish on the short term. Same for the Canadian market. For gold, short-term bullish because we have strong upward momentum, but gold is coming into resistance on the weekly, and so I've got a neutral rating there. Oil, I've lowered my ratings to bearish on both time frames. US dollar, long-term neutral, short-term bullish. Bitcoin, now bullish on both time frames. And interest rates, which we'll take a look at in just a moment before I look at a day trade of the week, I guess. Interest rates, neutral long-term and bearish short-term. So let's jump back into the Stockscores charts. The proxy for interest rates, TBT, and you can see if we look at the 1-month chart, we're fairly soft. And if this goes down, that means interest rates are going down. And that is pretty different from what we've had lately. Now, if we go to the long-term 3-year weekly chart, you can see that this upward trend line has been broken. We haven't really had a solid follow through to the downside yet. We are just hanging above support here. So I've left that rating as neutral, but it does appear like the market is starting to predict that interest rates at least are going to stop going up and perhaps actually start to fall back a little bit. If some of these issues in the financial market are a catalyst for that, we'll see. Now, the final thing I want to look at is the day trade of the week. And in a negative market like we've had, one thing you want to do is look for the sectors that are strong. And so the 2 sectors that I've highlighted this week that have had strength are gold and crypto. And one area that you can play crypto is in the crypto miners. So this week's trade of the week is RIOT, and we're going to look at a 10-day chart here first. And you can see that there's upward momentum in this. We started talking about this when it started to behave abnormally there. On Friday, it broke out from an ascending triangle, and so that made it worth considering as a day trade. So then we go to the 1-day chart, and you can see that on Friday, we had the break through resistance from an ascending triangle right there at $8, and it had a little bit of a run up to $8.40 before breaking the upward trend line. Not a considerable trade, but it was a really quiet, dry week for day traders last week. And in that scenario, you either have to play strong alpha stocks or stocks that are in a sector that is strong. And so it's all about finding that alpha. And in this case, it's alpha more so with the sector, and may continue to be so next week. So keep an eye on some of these crypto miners. RIOT, Mara, M-A-R-A, HUT, H-U-T. There's many of them, and something to watch for next week. Hope that you've enjoyed this week's Market Minutes video. I'm on vacation, which is why you don't have to look at my face. And I'll continue to do your weekly market updates for Saturday. And then, of course, on Sunday, make sure you check out my trader training video, a little topic about the ways to trade better, and that'll be out Sunday morning, and well, hopefully you'll enjoy that as well. If you have enjoyed this one, please click on the like button, subscribe to the channel, but most importantly, trade well.